Joining us now with the latest on trade talks, the future of TikTok and more, Treasury Secretary Scott Bessent. Mr. Secretary, it's good to have you on. Even I can figure out where you are from that backdrop.
Joe, good to see you. Good to be here in London.
And it's good to have you on. So I think you got, obviously, you have an earpiece in, so you heard what was in our headlines. Let's just go in order and talk about some of the things with Steve Miran that we talked about. And 48-47, isn't it beautiful? I don't know. And we even, I think Republicans couldn't even get all their members to vote. So it's very highly partisan. But is it an odd structure to have him stay in the administration, even if it's with a leave of absence? But he's only going to be there, I guess, 4 months. What's your comments on how that has been set up?
Yeah, Joe, I don't think there's anything irregular about it at all. I mean, what's the difference between taking a leave of absence, leaving his job open, and then having him to go through confirmation again? So I think just that the kind of kabuki was dispensed with, and everyone knows that he's going back to CEA. So I think cards on the table is actually much more transparent.
So he'd have to get confirmed again to go back to CEA? We were wondering about that.
Well, if he didn't take the leave of absence, if he stepped down, the job would have remained open, and then he would have had to be reconfirmed whenever he leaves January, February.
Then. Yeah,
So I think the signaling value here is that the plan is for him to come back to CEA. This is interim. It was caused by Governor Kugler's unexpected early departure.
If he were to stay and have his term extended in some way, shape, or form, I would assume at that point the CEA job would no longer be one that was on hold for him, that would be opened up.
Of course not, Becky. Of course, it wouldn't be held, but the plan right now is for Stephen to come back.
We also mentioned your latest thing that you're spearheading, among many other things, Mr. Secretary, and that is a search for a replacement for Chair Powell. James Bullard, we have spoken positively about him because he's been a friend of the show over the years, always thoughtful and always open and transparent about everything he was thinking. We did point out some of the things he said. He seemed to be stressing Fed independence and the ability to raise rates if necessary, to defend the dollar, or a lot of things maybe that a president that really wants lower interest rates might not like to hear. Was any of that disqualifying in your view?
None of that's disqualifying in my view. Of course, the Fed does not have a dollar mandate. The Fed has an employment mandate. It has a growth mandate. And the dollar is a byproduct of that. And Mr. Bullard and I had a very good, approximately 2-hour session. He has incredible experience from the St. Louis Fed. He is an expert on monetary policy, deep academic background, and knows the institution of the Fed very well.
There are some that think that the only thing the Fed really should be focused on, it's a dual mandate, but it's inflation and the value of the dollar. You just kind of indicated that their primary mandate, in your view, is full employment and maximum growth for the economy?
No, I said it's inflation and growth and the calculus between those two.
Okay. I guess going back to Fed independence, and I understand that I don't know of a single president that hasn't argued for lower rates, but under President Trump, do you think Volcker could have done what he did back in that period of hyperinflation that we had, Mr. Secretary? I think that's what people worry about. When there's times you need to take some medicine, maybe even cause a recession to do what's right long term for inflation. Would that be difficult under President Trump, in your view?
Joe, as you know, President Trump's very sophisticated economically, and I think he has been right at almost every turn, whether it's his first term, his second term. And if he thought inflation were the problem for the American people, sure, he'd be willing to have rate hikes. But right now, the problem has been that the Fed has been behind the curve. We're hoping they will start catching up in a rather fulsome way. As your previous guest said, 25 basis point cut is priced in tomorrow, and we will see whether the Fed wants to go to neutral or become accommodative.
The president thinks neutral is like 300 basis points from where we are right now. Do you agree with him on that calculation?
I don't think he thinks that's neutral. I think he thinks that's accommodative, and I think he thinks the Fed is behind the curve. We are in the middle of a housing crisis, and this affordability crisis, President Trump didn't get us here. It happened during the Biden administration, and the first thing that President Trump has done is bring down inflation. For the past 6 months, inflation has been below the Fed's target. So we had to bend the curve down, and now we're going to start working on affordability. And one of the keys to housing affordability is lower rates.